Ladies and gentlemen, good day and welcome to Rico Auto Industries Q2FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hazel Rathod from Essential Technologies. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and thank you for joining us for Rico Auto Industries Q2FY25 earnings conference call. From the management, we have with us Mr. Arvind Kapoor, Chairman, CEO, and MD, Mr. Kaushalendra Verma, Executive Director, Mr. R.K. Nilani, Executive Director, Mr. Rakesh Sharma, Chief Financial Officer, and Ms. Ruchita Gupta, Company Secretary. I now request Mr. Arvind Kapoor to take us through the opening remarks, after which we can open the floor to question and answer session. Thank you, and over to you, sir.
Good evening. This is Arvind Kapoor from Rico Auto, and I welcome all of you to the Rico conference call, investors call today. And a lot is happening in the world. The elections have taken place in almost all the democracies in the world, and there have been a lot of surprises that we've all seen. We've seen change of governments, and we've seen the writers come in, be it in Europe or be it in America or be it in any other country. There are a lot of changes which have happened. And so I think everybody is waiting and watching as to what would happen to the global policies and that would take place by Mr. Trump coming in the U.S. and by the other changes which are taking place in the world. And if the people get more protective about their countries, it is all wait and watch at the moment. Coming back to India, the GDP growth, last time we had mentioned that it would be around 8.2%, but now it has been downgraded slightly to about 7.3, 7.5%. But we are hoping that we'll still be touching around 8%. And India is still a great story, and let's hope that it continues like this. We've had a good monsoon, so I think the market should be good. And we do see it in the pickup of the motorcycles, especially in the rural areas. There has been a very definite growth in the two-wheeler industry. The pickup in the market has been pretty good. And the car industry did well as far as the season is concerned, but there is some stress that is coming up in the car industry, primarily in the cheaper vehicles, the entry-level vehicles. And we are all working, the industry is all working as to how the demand could actually pick up in that sector as well. The commercial vehicles are down, and till the investments start taking place in the infrastructure, that would remain impacted. And that we are hoping that after the elections in Maharashtra and the other places, we might see some more investments taking place in the infrastructure. So this is broadly what the market is like. And okay, I must mention about the exports. Your company, we have been doing pretty well in exports, but the last quarter I had mentioned that because of this geopolitical activity and the wars which are taking place in the Middle East and in Europe especially, the exports have come down, and we are looking at alternatives. And our exports, if you compare it to the previous quarters, it's come down by almost 15-16%. That's almost about 75 crores from whatever we had done in the previous quarter or in the previous year in the same quarter. But we've been able to compensate it by adding on more customers and also getting larger share of businesses from our current customers in the domestic market. So we lost about 75 crores there, but we gained almost about over 150-200 crores in the domestic side. And by the end of the year, we are looking. We think that our exports would be 72 crores. It would be on the annual basis. Will be about 72 crores down, and but our domestic market would be almost about 300 crores plus. So that's and we are putting in more effort and to see that the domestic market also picks up, but in the exports also we managed to get more orders, and there would be supplies that would start by the end of the fourth quarter. The next year we are hoping that we'll be back into the previous figures of exports that we were doing earlier. If you look at the turnover of the company in the last quarter, in the first quarter we had mentioned that the second quarter would be flat, but I'm happy to announce that we have actually grown by over 7% in the second quarter. We are happy with the growth, and so whatever 7% growth that we anticipated in the third quarter, we have been able to prepone it to the second quarter. The third quarter we are hoping to grow by another 1 or 2% or 3%, and the last from now onwards, I think the growth will be about 20% in the fourth quarter, including the second quarter put together. So we are very much we are close to the target that we had promised you in the beginning of the year, and let's hope we exceed it. So that's where we are working. On the profitability side, the profits we are very hopeful that by the end of the year, the last quarter, our profits will be better than the last year's profits. And the impact that you see in this quarter is primarily because of the aluminum lag, which would be compensated to us in this very quarter. And so analyzed, our profit will be better than the previous year. And that's what we are looking at this year. We are very confident of that. And in the domestic market, we are picking up more orders, and some of them are in the two-wheel industry and also in the car industry. That's Maruti and Hero, and also Piaggio and the other makers. And the advantage of the domestic industry is that the production, the turnover and the production and the profitability start showing up immediately. Whereas in the export front, what happens is that it takes almost 6 months to 1 year before the turnover actually comes into the book. The investments take place much in advance. So we are trying to get larger share of the businesses on the current businesses that we are doing with the current customers, primarily because we have surplus capacities because of exports, and we have diverted them into the domestic market. And on the new plant at Hosur that we are setting up, we started flattening that. So we are preparing the ground for starting of the construction. I think another quarter's time, from next quarter, I think we should start the construction there. And we also start making the buildings, as well as also start ordering the equipment that is required. This plant is primarily dedicated to Toyota, supplies to Toyota for the hybrid vehicles and electric vehicles, and also to the suppliers of Toyota. So we are very happy and very confident of that plant coming up in time, and also starting off the production in time, in line with the requirement of the OEMs. That's it for me, and we are open to questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 this time.
Till the question come in, I can still continue. And on the defense side, we have started making the containers, the shooting ranges which are required for defense. And this is for the Navy and the Army. And we started producing those. And the orders are pretty good, very healthy. And we should deliver the initial orders which we received for about 35 containers. Those will be delivered before hopefully by March end. And we are bidding for another 150 containers. So that would also get finalized before I think January or February.
To ask a question, please press star and one now. The first question is from the line of Bhaskar, an individual investor. Please go ahead.
Yeah, hi, everyone. Are you able to hear me?
Yes,
Yeah, hi. Just a quick one on the defense side. In the last quarter, we mentioned that we get some revenue, right? Not 35 to 40 crores revenue, which will be, we're waiting actually to get invoiced to us. So that amount is actually, we received it or it's still pending?
Yes, I mentioned that we'll get 35 crores in this quarter, but the production has started. We've done about, I think, about 8 to 10 crores, and this gets covered in this particular quarter. And so we are online as far as this is concerned, and all the orders are in place, and the inspection and everything is also carrying on. It depends. This is a challenge, making the containers and getting them approved in time before the end of the quarter. But that process is on.
No, but last time it has been communicated that we are kind of just waiting for the payment only, right? It's not kind of...
No, not the payment. No. We never said that. We said that we should be able to have the turnover of this. We never said the payment. Payment comes in much later. But we are talking of the dispatches that will take place.
Okay. In this case, like when we get the actual payment from the whatever we dispatch in this quarter and next quarter, do we get any payment for this, or we need to wait for the next financial year?
No, we get 100% payment back, but the only thing is that it depends. There's a system of delivery. You get 80% payment and payment on delivery, and then after the inspection is over, at the customer end, the final payment is received. So that's a cycle of almost about 3 to 4 months before the final payment comes in.
Okay, so that means
that is all defense. That is the process they follow, so we are okay with that.
Okay, that means like it's most likely that we don't get any payment in this financial year, right?
No, we'll certainly get payment in this financial year. We will certainly get payment this financial year also.
I mean, a full payment, I mean.
Beg your pardon?
A full payment, I mean, like 80% we may get it, but if you get the 100% payment, as you mentioned, like it will take 4 months. So we are already in mid-November, right?
Yeah, that's okay. That's a so that's a cycle. I think we don't have a choice there. That's okay.
Okay, because we just want to get an idea, right, of what kind of revenue we get, because we are expecting like this year, at least from the defense, we'll get more good margins. Then it will improve the overall margin, right?
Wait, 1 minute. See, revenue based, the billing is full, and the full billing will be there. But the payment at least is the revenue will be total. But the payment that is released is 80%, and then at least 20%.
Okay. Yeah, what I mean to say, like it won't improve the overall margins, right, for this year. That's what I mean, because we are still at 8 point something.
It will improve the margins also. It's only the cash flow thing that gets delayed by that thing, and our credit period from government is 45 days only, but the whole process takes 3 to 4 months. Okay.
Okay. So actually, the net profit figure will be there, but the actual cash won't be there in our book.
Actual cash takes time. Yes.
But the margins would obviously be captured by when we do the billing.
Yeah.
Okay. Yeah. And the second thing is, like, do you have any chance of actually getting into US new electric customers like Rivian, Tesla? Anyone you're approaching? Is there any way that
can you please repeat your question again?
No, so Bhaskar, your voice is not clear.
In old years, you pretty much covered everyone, right? We have going to Toyota, all the big companies. But the new gen electric vehicle companies like Tesla, Rivian, Lucid, are we by any chance had any contact with them to supply?
Lucid already started the discussion. We have already, our discussion with Lucid is already taking place, and with Rivian also our discussion taking place. In fact, one of my colleagues was in Tesla about a month back, and we're visiting them, and we've already visited them. So discussions are taking place with all the customers.
Okay. The main reason is like because Rivian actually trying to change the supplier side, so that's the reason I asked. Even though they are not having big volumes now, most likely the volumes move from old OEMs to the new ones like these, right? That's the reason.
So we are discussing with for all the new programs. We are discussing with all the large electric vehicle makers, including Toyota and Maruti Suzuki, also for the electric vehicles, which are the future.
Okay. The last one is like how much will be that defense this year, the total revenue from the defense?
We are estimating 50 plus minus 20. That's what we are estimating.
Okay, from 30 to 50 crores, something like that. Okay, that's it from my side. Thank you.
Thank you, sir. Before we take the next question, we would like to remind participants that you may please press star and 1 to ask questions. The next question is from the line of Akash Verma, an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, thank you for this opportunity. So, as we see that in Q2FY25, the revenue was 580 crores and domestic were 497 and exports were 83. So, what would be the expected revenue from domestic and exports in Q3 FY25 and for the full year?
For the full year, we are the domestic would be in the region of about 2,000 plus. It will be 2,100, around 2,100. That's what we are estimating as far as domestic concerned. And export would be in the would be close to 400, 375 around that.
Okay, that is nice. And will there be any improvements in the EBITDA margin?
Oh, certainly. We will be better than last year.
Yes. Thank you so much.
Thank you, sir. To ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. To ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 this time. The next question is from the line of Siddharth, 10x Capital. Please go ahead. Mr. Siddharth, your line is unmuted. Hello, Mr. Siddharth.
Hi, sir. So, sir, just that, over the past few years, we've been targeting at some point, we were looking at some 3,000 crore kind of revenues with operating margins improving to an extent, being also aided by defense contracts. Now, obviously, last year, clearly the revenues fell. And this year also, we don't seem to be, what we've been guiding doesn't seem to be in sight. So, how do we look at revenues from here, let's say, over the next couple of years, rest of F25 and F26? And what are the kind of margins and what are the levers to our margins? You said it will be better than last year. We seem to be at closer to 10% band for quite some time. Long term, we've been guiding at a higher number. So how do we look at this?
Siddharth, a good question, and we have been this year we are targeted to be around 11 and possibly plus 11. That's what we are targeting. And this is despite whatever is happening in the market here, we are getting a better share as far as domestic concerned. In the export front, unfortunately, the electric vehicles in Europe, they've dropped by almost 40%, and we are still trying to get compensation for all the investment we had done, and that would also add to the bottom line. We have been compensated to some extent, but we'll be getting further compensation for the investments we have done. Having said that, we have also diverted some capacity from the export to the domestic so that we sweat our assets rather than just keeping them idle. And last time I had mentioned to you that for 26, 24, 25, 25, 26, there would be growth of about 12%. That's what these are the orders already in hand. That I'm basing it on that. I'm not talking of the RFQs and the other orders that we have not received till now. And there, after that, the growth that is taking place for the orders which are in hand, where the production starts happening in 24, 25, 25, 26, 26, 27, 27, 28, and 28, 29. We are growing by almost about 8 to 10% with the orders already in hand. But we are very certain that by the end of now, if you look at the total orders we've already received till now, is to the tune of 490 crores. 490 crores on annual basis. These orders, this is the highest we've received in 1 year. We still have 4-5 months to go, and we are confident that this 490 crores will get converted to almost about 750 to 800 crores. That's what our internal target is. And that is on annual basis. And I'm not saying that all this turnover will start coming from next year onward. This turnover will start coming, some next year, some the year after that. And having said that, then there are RFQs which are pending, and our success rate has been close to 50%, 47 to 50% success rate that we have on the RFQs. And if we take those into consideration, then we are growing by almost 15 to 18% every year. That's what the growth is and we cross almost, we are close to 5,000 crores by 29-30. That's what we are targeting, and that's what we are determined to achieve. That is also helping us to get better margins because there is a lot of exports in this also, and we are hoping that with the tougher policies of the US, where China plus one is now actually taking shape at the moment. And we are hoping that we are getting more aggressive inquiries now for immediate shipments to take place. We are hoping that, and exports definitely have a better margin. And we are hoping that our margin would also improve. Our target is to cross 13% in any case. That's what our internal targets are. And that's the target that has been given by the board also to our teams. Yesterday also in discussion, this was the main discussion that is taking place, that 13%, how can we do it sooner than later? So I'm not saying that we'll touch 13% after 5 years. The target that the board has given us, that next year we should be crossing 13%.
But some parts from 10% to 13%, it all sounds very nice. We haven't ever done 13%.
No, it's not 13%. It is 11% this year. We'll be crossing 11% this year. So it's 11 to 13%.
Okay, fair enough. And sir, what is the progress on the defense side? It was looking very promising until 2-3 quarters back, and we were looking at some reasonably big orders. And if my memory serves me right, we were saying that the margins in exports will be significantly higher than the 10-11% that we talk about in the overall auto business. So how do we look at this business over the next 2-3 years? What scale this can get to, and what could be the EBITDA margins?
It depends. We've been working in defense for almost 10 years now, and it's only now that the true orders have started fructifying. And the margins are a lot different than the auto industry in the defense. And when we tell you that we are going to 45 crores or 50 crores this year, we are actually talking internally. Our target is to cross almost 75 to 100 crores. But we are already talking about 45, 50 because we want to achieve those targets. Because in the defense, there are a lot of things which get delayed at the last minute. And so we don't want to make any promises now and land up in issues. And if you look at the bidding process that is on at the moment and where we are involved, we are, the orders in hand, the orders that we are talking or discussing is over 300 to 400 crores a year. But at the moment we don't have them in hand, so I don't want to give any commitment to that. But earlier we were bidding at much smaller orders. Now these orders on the containers shooting range is much higher.
Okay. So when we say, whatever targets we have over the next.
Siddharth, 1 minute. Like in the auto, we are fairly sure as to what the turnover is going to be and what the commitment of the customers are. And unless there's a geopolitical crash that takes place, like in Europe this time because of the Ukraine war and also the EVs dropping absolutely, the auto sales have actually come down. Unless something like that happens. But in defense, it's not very. We know we can get the orders, but when it comes to execution and actually getting approvals, etc., that sometimes can take a little longer. We are in it now, and we are confident that we'll also mature over time and be able to give you better commitments as far as defense is concerned.
So, sir, finally from my side, our revenues, which were closer to, let's say, 2160 crore last year, or a little more than 1100 crore this year. Let's say by F27, what is the number we should be looking at? If we have some sense of that.
Yeah. I'll tell you. 23, 27, the orders in hand already, which we are required to execute, we are in the region of 2,920 crores. That's about close to 3,000 crores. That's what the orders in hand are, and we are ready for the deliveries to take place.
So we are saying that F27 we should be 3,000 crore in revenues and we are getting short of at the orders in hand. We are a little short of 3,000. We are 2,920. 2,920. And we should get executed at, let's say, between 11 to 13% margins. That is what we are having.
Yeah, the board has given us target of 30% on this.
11 to 13.
Okay. Yeah, on 11 to 13. Yeah. So the year after that, we are close to 3,200 crores.
Sir, we wish we get there because unfortunately over the last couple of years we've had some of these discussions, and unfortunately, obviously, the environment has also been difficult, but we've never been close to those numbers. So just wanted to
these numbers I'm telling you are the orders in hand. I'm not talking of the RFQs in hand. The requests for quotes are separate. If I total those, then we are close to 4,000. We are not talking about those. That we would give you as a surprise.
And this doesn't take into account anything meaningful from defense, just to clarify.
No. It is primarily auto.
Okay, got it. Wish you all the very best, sir. Thanks for taking this question.
Thank you so much, Siddharth.
Thanks.
Thank you, sir. To ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. To ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 this time. As there are no further questions, the next question is from the line of Darshil from Finvest Advertisement. Please go ahead.
Yeah. Hello, am I audible?
Yes.
Fine. So, also my question is like, of course, we are seeing some pressure in the international market for the auto side. So, what are looking for the next 2 years? Are we focusing on the domestic side, or will again shift, will try for push for more towards international orders going forward? Again, after once Trump come into the the White House, so we can see some auto side getting more boost, something like that, because he's of course trying to put tariff on China even in BYD section. So if you can just give me some inputs on that.
Well, I think Mr. President Donald Trump, elect, he's already putting a stamp in a lot of policies which are taking place now, and there are a lot of changes that have already started happening in the world. He's been there only for about 3-4 days so far, and we see some better negotiations taking place in the Middle East as far as the war is concerned. And there's also negotiation taking place how Ukraine war can end. All this process already started, despite the fact he's not taken over as a president. But having said that, we also see a lot of excitement in the market here because of the pressure on China that he would like to exert, and also he being very friendly with our government and supporting our government. So I think that will also help the Indian market as well. Having said that, these political changes will keep on taking place, but we do get impacted. But our focus will always be in our customers, be it in the domestic market or the international market. The pressure is we are exerting equal amount of pressure for the exports as well as the domestic. And in fact, at the moment, the domestic market has grown faster than what we had anticipated. Okay, our share of the business has grown faster in the domestic market. There has been a growth as far as two-wheelers are concerned, and the car industry is also growing, even though we would hope that it grows at a much faster rate. So we expect it to grow by 10 to 12% this year, but let's see what happens at the end of the year, because today we are under pressure. But we are not leaving the domestic market or the export market as far as our market is concerned. So focus is completely there.
Okay, and are we doing any strategy to acquire some more market share in the domestic side, as you are more focused towards domestic side? And if you can just brief me about what the current market share we are having right now on the domestic side.
No, if you look at the customer, wherever we were 50%, we are going to 60 to 70%. In Maruti, in some cases, we were 80%, we've gone to 100% some components. And where we were required to supply 70%, we are touching 100% in Maruti Suzuki, because the other suppliers are not supplying. So all that is happening. And so we are increasing our share of in domestic market. By and large, the big players have two to three suppliers, and so they normally distribute 50% and 30 and 20. That's the ratio they normally have, and or second ratio 70 to 30. That's what they normally put in. But we have been able to exceed whatever the percentages that the Marutis and Heroes and others have set in, and we are still fighting for more. And we are working on that, and we are confident that. And then the other thing is some of the prime products that we have, some assemblies where we do a lot of R&D. Those products also we try to push and give better performances, better quality. And to give an example, in the two-wheel industry, the clutch. We have a very huge R&D in that. We invested a lot in the R&D. For the first 4 or 5 years, there was only development that took place. But now the results are coming in, and we have been able to get a better share from Hero, as well as now Piaggio. The Italian company has finally approved us. Japanese companies have approved us for the friction materials that we are making. So we are making inroads everywhere, wherever these materials, these special materials are and special components are.
Okay, thank you, for the answer. Thank you so much.
Thank you, sir. Before we take the next question, we would like to remind participants that you may please press star and 1 to ask questions. The next question is from the line of Bhaskar, an individual investor. Please go ahead.
Hi, sir. I just forgot to ask about the land parcel we are planning to sell. Is there any news on that?
No, so that at the moment there is no development. I didn't mention last time that the differential that we were getting was about 300 to 400 crores, and I don't think it is worth doing that, because this is a huge plant. And we are looking at differential at least about 1,000 crores so that our shareholders also benefit by that. And we are working on it. The day we get it, we will dispose this off.
Okay. Thank you, sir. Yeah, that's it. Thank you.
Thank you, sir. To ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. To ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Well, thank you so much. And I only like to give you the confidence that if you look at the results, the costs are under control. The raw material is a pass-through, so there's a lag at the moment. And whatever we extra raw material we consumed in the last quarter, that will be paid this quarter. And so the results will get even better. So 11% is a very achievable target that the board has also given us, and our internal target is also to cross the last year's performance that we had. And the board has also told us to look at 13% and how we can achieve 13%. In fact, that's a presentation we need to give to the board in the next quarter, and with absolute firm steps to be taken and how further costs can be changed and improved. You see improvement in the electricity cost and the labor cost and other costs as well. And there's a lot of work that is carrying on. There's a Rico production system that we've introduced where in many cases we've been able to reduce manpower by almost 40 to 50%, and that we are doing across the board now. And we've done it in almost 30% of our production areas, the large production areas. And we are trying to implement it in all the other areas as well. So there's a lot of work that is happening and a lot of excitement that is there. And we do understand that the market is under pressure at the moment, but we are confident that we will exceed the expectations. It's like we had promised that if the second quarter is flatter, the third quarter is 7% growth, but we've been able to prepone that by 1 quarter. We did that growth in the second quarter itself. And we are hoping that we exceed whatever we are promising at the moment. Thank you so much for attending the conference and taking our time to be with us. Thank you so much.
Thank you, sir. On behalf of Rico Auto Industries Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.